All right, everything looking good. We are live. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on February 12th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly, or you'll end up living in a van down by the river. All right, everything looking good. Let's jump right in. So we're going to start right where we always do. We're going to look at TNX and DXY first, and then we're going to talk about yields. We'll look at the major indices, take a look at some cryptos, and talk about what I think is coming, and a little bit of what happened over the weekend as well. So here we have the TNX 10-year Treasury yields, and we see on the TNX, we're now approaching that previous lower high right here. So we have bullish divergence off of the 200s, and we're now approaching the previous lower high. So if we take that out, we're likely going back to the highs again. Obviously, this is the opposite of what the market is basically pricing in. No one is pricing in higher yields from here. No one is pricing in higher inflation from here. So if that's what we get, all of a sudden the market has to reprice. So very, very important. Now let's jump over to DXY. So this is the dollar index. We've been in this consolidation, correction, and now here we crossed the 821 back bullish. So if you got out at one of these crosses right here, obviously one was kind of a failed cross breakdown, but that was back at 111. We're now down here at 103, and this is crossing back. So that is a big move in currencies. Again, we see that same massive spike of bullish divergence here, and obviously we have our bull cross in place. The likely target is a 200 exponential and 200 simple at like 105 and 10, roughly 6.5. And then again, we have to see what kind of momentum we pick up and how does this start looking on longer time frames as it enters into the bullish control zone. I mean, this could just be a dead cat bounce and then we go much lower. But if we do see continued strength in the DXY and it's just getting started, we don't know. It could get started, run up, lower high, and then go much lower. But right now, we're starting to see momentum pick up. Tells us likely that's going to put pressure on risk assets. The same with TNX. And that's obviously the tag team. We talk about it all the time. When those two are strong, everything else is typically weak. So that's what we're paying attention to. Now we're going to jump over here and look at the 210 spread here. That's obviously another big topic right there. So we see up here the blue, and then we see the orange as well. That's giving us our 2 and our 10. And, the spread is basically wherever this area is blue. So when I put my cursor here on the orange part, you can see real clearly what's blue. That's basically the inversion spread. So when it turns blue like that, it means it's inverted. And then the thicker the blue area is from like top to bottom, the more inverted it's getting. So not only is the yield curve, on the 210 inverted right now, but it's actually the most inverted it's been yet. So it's not only that it's just gotten inverted and now it's getting ready to roll back over, it's continuing to get more and more inverted, which essentially means that there's a difference between what the market is pricing short-term debt and what they're pricing long-term debt. And that's likely because the market is, once again, going to be mistaken about, inflation or rates, depending on what you're using to measure what. So we see here, if we just jump down, and we take a look at the inflation indicator here, we can see, we were in a very strong uptrend when it's blue. We level out a couple times where it's red, and then we go back into a strong uptrend when it's blue. And now here we cross down below the slope line, it flips red. But here we see this big flat area right here. That's not what it looks like when inflation is going to be coming down. That is essentially just calculated based off of the moves we're getting. And this is just flat now. So that tells us, what's happening is inflation sure has come down, but now it's just kind of going sideways. And that's not really what you want to see, obviously. So we'll see how it plays out. Obviously, we're losing momentum as well on the TDMACD. So it does look like that is rolling over, likely to come down. But who knows? We could easily get a few more ticks back up, a lower high, bearish divergence, and then eventually break down from there. But if we really zoom in here and we really look, the most important thing is just looking at our short-term debt right now. And we're basically we're at 4.51 right now. And the cycle peak was right here at 4.67. So while we're still lagging down here on the 10 and it doesn't look nearly as aggressive. We have that high, we have a lower high, and then we have what could be a third lower high here. But on the 2, the shorter term debt, we're basically getting ready to break out to new highs. So we're seeing 2 drastically different stories on the short versus long-term treasury yields. All right. So, and, obviously if the repricing has to happen or does happen, whatever it's based on, multiples or money expansion or, whatever specific statistic the market's going to go off of or whatever asset we're talking about, it could be a big deal. Could see a massive repricing. Obviously right now the market is pricing in the perfect soft landing with inflation consistently coming down to 2%, multiple cuts by end of year. So if any of those things don't happen according to plan, that's the repricing. So US oil here on the daily still coming down, but now we've seen one low here and then we basically came back down and retested that higher low. So the real question is going to be, are we going to break out above this high right here, or are we eventually going to take out that low again? So 2 bounces off that low and we're moving up here. What we really need to see is a higher high, a close on the daily above 82. And then, likely we see that continuation up to the 200 exponential and simple. Obviously, oil right now is in a bear market. We are seeing momentum pick up. There's definitely some potential for some further upside. But the more times we come up here and then come back down and test the bottom of the range, the more likely it is to break. But for now, obviously out of trouble temporarily. So Dow Jones. So we are still on top of the 200 exponential. We're still on top of the 200 simple. The slope line is blue on both of those. We're coming back up here testing the slope line on the TDMACD. A bunch of red. It looks like so far it's been a rejection. But if we consolidate here long enough and then see a break up, could start looking really good. Like we're actually back in a bull market again. Right now, the market's deciding. It is definitely deciding. We had the 821 bull cross. We saved it. And now here it's starting to roll over again. We're going to try to save it again, obviously. If that does not happen, we likely come down to 200 exponential or simple for, what could amount to the final retest before the bull market. If it holds, we go much higher. Game back on. If not, though, we'll have to see. Be like full-on slinky theory, just kind of bouncing down here. All right. So let's jump over here to SPY. So SPY, we were in this descending, broadening wedge. We had a bunch of resistance here, a big cluster at the 200s, at the descending resistance, all of that stuff. We broke through it. We put in a higher high right here. We're coming back down, retesting the level potentially, the 236, the 200 exponential, which now has a bull slope. 200 simple does not. But I mean, this is where we want to be. So if we see this come down here, the indicator oscillators reset, we hold above key resistance, that's likely setting up for another leg higher. And we have this ascending channel. We have this breakout from our descending broadening wedge as well. Measure move way up here to all-time highs. Triple Qs are back on top of the 200s. This is actually getting the retest as we speak of the 200 exponential. Looks pretty similar to what we're seeing like on the Bitcoin chart. So QQQ still looking very correlated to Bitcoin with the overall big picture. We do see a hard sell. We are leaving the bullish control zone. We have multiple red histograms on the daily. All that into support. So we have a bunch of bearish stuff on the indicator oscillators at support. So right now, kind of mixed signals, in my opinion. As obviously we don't want to be selling into support at the beginning of what could be a macro bull trend that takes us to new all-time highs. So Russell had a nice little spike up here, took out that previous high, didn't quite get past this one, unfortunately, coming back down to retest the 200s. They have flipped blue, technically bull market on the Russell. So, we should be buying the dip when something's in a bull market. Now, that being said, again, we see a bunch of red histograms, hard sell signal, leaving the bullish control zone. So it definitely wants to come back down here and retest support. It's just a matter of what happens next. I mean, this is it. Every once in a while, there are moments in time in the market where it could go either way. And it's really just about who shows up, buyers or sellers, bears or bulls. That could be confusing. So bulls or bears. How about that? Same thing with gold, back on top of the 200s. They are technically blue. The 821 has crossed back to the downside. So we had a nice reflex rally uptrend. and now we're trying to flip back into a bull market. We're very, very close again. This has been pretty choppy through this range for the last couple of years, though. So it's been literally nothing but fake outs. And the truth is, selling the higher end of the range and buying the lower end of the range has been pretty much the way to do it on here. And as a matter of fact, if we were just going to go ahead and just scrap all of this trash because it's useless, and we just did, you know, something along these lines here, I think this is really what we're looking at. We have a high, we have a little spike out here. We have an exact touch of the top right there. We have an exact touch of the top right there. We have multiple touches on the bottom, a bunch more right here. We have some reactions on the heart line, break below it. You know, it hasn't acted as like hard support, but we definitely see some clear touches along the way. And, you know, some short-term rejections, longer-term rejections. But right now, the 200 exponential and simple are down here basically at the heart line of the channel. So I think more likely than not, gold wants to come back down here to like 1770 to like 1800. We are back in the bearish control zone. Just entered it. So obviously the bears have taken back control, but the price hasn't necessarily moved yet. Now obviously the bears took control when the 821 crossed bearish as well. So we see a lot of confluence here, a bunch of red histograms, red slope line. So it does look like it wants to come down some more. And honestly, that's good. It could come down to support, find support, and then go much, much higher, have a breakout, go to new all-time highs, you know, and then everybody like starts carrying around, I don't even know, like a chisel and like shaving off little pieces of gold and paying for stuff. And like all of a sudden it's like a gazillion dollars per ounce because dollars are gone and it's just the ounces now. Yeah, I don't know. Maybe. Silver is next. Back testing 200 exponential. Again, pretty bearish here. Looks like it's coming down to the 200 simple. But overall, I mean, it's on top of the 200s. So short term, it looks like it wants to go a little deeper. But, you know, this is the opportunity for the silver bulls to show up. You know, we had a really nice bull trend, bear trend, tried to save it, tried to cross it back over, didn't work, failed, went to new lows, came back up here, and we're just banging our head on that long-term descending trend line in white here. And honestly, you know, the likelihood of us getting through that is just not likely. It's going to take a big move. Something strong, some strong technical thing that's going to get us through. I mean, if we get through $30, the sky really is the limit for the silver, and I'll start singing a different tune. I mean, you guys will see the entire chat will fill up with the, I don't know, what are they called? The Silver Rangers or something like that? The Silver Tears? I don't know what the silver guys are called. The Silver Cult? No, that's probably not it. GSG below the 200s. Looks like it's coming up for a back test. LNG, again, just dancing around the 200s. We're getting no movement, basically. So, Mosaic, you know, this is probably like a crazy like stop-loss hunt shakeout. And then this thing just probably goes to new all-time highs. And then, you know, in hindsight, retrospect, whatever, looking back, this will look even more shady. Maybe not. Maybe it gets rejected here and goes lower, takes out the lows, and then it's no big deal. But as of now, if this ends up being the bottom and then this thing starts taking off back to the upside, this is going to look so suspect right there. I mean, it already looks very suspect. AMD had the nice breakout. The back test ran into the resistance at the top. And we're, you know, basically back at the 200s now. Most important thing is just hold this area. Come back down to that trade entry and get a second chance at this big guy before it goes up. So Visa hit the 786 beautifully and looks like it's at least short-term topping out. Again, looking to come back down here and, you know, retest support. Everything looks like it wants to come back down, retest support. And then people want to see like, hey, is this holding? Is everybody just selling off all the positions they just opened? And this is all just, you know, leveraged up options moves? Or is this for real? And no one knows. I mean, the market's going to find out real soon. ACB looks terrible. Looks like it's going back down to new lows. Tilray, all the pot stocks just look absolutely horrendous. They're definitely all going to zero. Lulu, we had the breakout of the descending channel. We're at the support of the ascending channel. I mean, this doesn't look great right now. It's still at like the entry area. But I mean, let's be real. There's definitely a possibility this is going to fail, roll over, and go much lower. It does look pretty bearish here on the daily, not being able to like hold the 200s, but higher lows as well. So, you know, a lot of this stuff really is just a coin toss right now. So you got to be real careful. Anybody that's talking with like complete conviction that like everything's getting ready to go up and the bull market's on, or everything's getting ready to go down and the bull market's, you know, over, or the bear market's going to resume, just be very, very careful. Nobody knows right now. And you could tell looking at these charts. So same thing with Home Depot, you know, on or at the 200s, still above support for now. I mean, bottom could really fall out on this stuff. There were some random requests for last week. Not going to mess with those. Let's take a look at crypto. All right, so Bitcoin. Let's do these in the other way around. So here we have the Bitcoin futures chart first. So Bitcoin futures, we do still have that gap back here at 19,540. So that's the obvious target, you know, to come back down, fill that gap. Bunch of red histograms, hard sell, you know, leaving the bullish control zone. Back tested the 200s, got rejected. You know, nice move to the 200s, reversion to the mean. Got rejected, lost 8, lost to 21, got rejected by the 200 exponential, and now we close below 200 simple. So we're below all 4 of our moving averages. So that's a lot of pressure, a lot of resistance right above head. So now, you know, the obvious move is either down to 20,800 or back up to 23,565, or if we get the big flush down, 19,580, call it 20 grand. You know, and obviously this is very, very bearish. So the first retest, we would expect potential rejection. Now, on the other hand, we look at the Bitcoin spot chart. Again, we see all red histograms. Slope is still blue, but rolling over. We left the hard sell signal, bullish control zone. Came all the way down to the bearish control zone at support at the 200 exponential. 200 simple still down here at about 20K, which is also where that futures gap's at. So very high probability. I think we retest the 200 simple. We got the 821 bear cross. So we've been, you know, talking about this the whole entire time. When the bull cross happens versus when the bear cross happens, depending when you get out here, let's say at the end of that candle, it's still 29%. So, you know, you're going to get some situations like this where you might enter in on the bull cross and then it moves up and then it sells back off. And then by the time the bear cross happens, you know, you lose 3% or something like that. You're going to have some small losses for sure and some fake outs. Sometimes you can avoid those fake outs. Sometimes you can't. But if you trust the 821s, you know, this could have been pretty brutal right here. You know, a lot of times this can be a basic strategy that can be real nice. So we'll see if that 20K gets hit. We're sitting on support right now. Resistance coming down over our heads. Bear cross just took place here. Very close to the slope line, flipping red. Got to be careful on it. I've got a small long position, actually, after I told you how bearish everything is. You're like, you fucker. Well, look, here's the thing. We'll see how it goes. It looked like on very, very short time frames, and I never do this. I'm going to the 1 minute here. But I was looking at basically this here. The 821 bull cross, and then we just broke down from this. We're back testing it right now. We'll see. We'll see. I mean, if we start putting in new lows, I'm out of here. This was just basically the future scrap closing after we kind of ran up over the weekend, because we did leave like a small gap there. So we'll see what happens. We're at that level. You know, if we get a pushback up, I'm expecting at least like 22.4, maybe even into like the 22.8 level. Very little risk. Not great reward either, but when we look at the 4 hour, you know, this is also just buying the retest of the 200s. So we're kind of like chopping around in the moving averages here. It was starting to look decent there, like we may get the 821 cross on the 4 hour, and that move likely to play out. And we did see the rejection at resistance, you know, which you would expect, obviously. So we'll see what happens. We're consolidating here for a bit. We see a bunch of green histograms, momentum building to the upside. So sure, we got that ugly candle right there, and it makes everything look a little uglier than it did. We still have a low, higher low, another potential higher low right here. So it doesn't look terrible. But, you know, if we got to get out of that one, we will. It's better to take a small loss than just hodl. So ETH looking a lot like Bitcoin, kind of below the 200 exponential now here. So 200 simple seems like the obvious target, about 1439. Definitely losing momentum here. Total market cap looks a lot like Bitcoin. We have the bull cross 821. We backtested key moving averages, and now we're just kind of squeezed in between them. Momentum picking up here on the weekly. Hard buy signal. The problem is we're using a lot of momentum and price is not really going anywhere. So we got to be real careful that this isn't going to be like a pathetic underperforming little like move up and then just rejection. I mean, which it may already be. Bitcoin dominance chart. Bitcoin still gaining dominance, was able to hold the 8 for now. So it does look like it wants to keep trending up here to like that 47.5 range. You know, basically just the top of the channel. Bullish control zone, bunch of green histograms. It's definitely got some room to move here. Bitcoin dominance without the stable coins, much more bullish. It's definitely trending up here. It saved the 821 from a bear cross here. It held our ascending support line. But I mean, it doesn't look amazing here. Let's be real. But it seems like it's about headed back up here to like 51 or so. Matic holding strong. Again, just much, much stronger than most cryptos. Well above the 200 exponential and simple. Both are blue and trending up. It does look like it wants to come back deeper though. So I don't know. This all of a sudden this trade right here, you know, the chance to just get back out and then reevaluate seems like a much better idea than potentially riding it down, getting stopped out at support, and then it going in our direction anyway. So, you know, the new trade is probably something a little closer than this, since that breakout just doesn't look like it's going to happen. I mean, it's still like 4-1. It's a super crazy stop loss, obviously, but, you know, you could tighten it up and run it off the 200s there, or you could just run a smaller position size. BNB, another one we've been watching, staying strong here. Still well above the 200 exponential and simple. Seems much more close to the 821 bear cross about to happen. Probably comes back down here to like 280s, 290s. We'll see what happens then, though. I mean, it could get bought up here. This is looking more and more bullish. Higher low, above the 200s. You know, it's starting to like cool off here a little bit. Back at the 382, but 0.5 seems next. And then after that 59% nut. Seems likely. We'll see. Take a look at tech real quick. Tech nasty. So Tesla had a nice little play out here. So the first trade setup played out real nicely. Took profits early and often, as always. And then, of course, the second one, again, early and often, played out nicely. Hit our target here, and then just kind of started rolling over. I mean, it definitely got pretty exhausted here. Let's be real. Bullish control zone. We're about to get the cross down. We're still way up in the bullish control zone, though, so we could even go higher, honestly. I mean, I wouldn't bet against Tesla right now. It's more likely, I mean, I don't want to get anybody excited, but if Tesla's at 260 in a couple weeks, like, let's not act surprised. Microsoft had that shoot up here with like the little AI excitement, hard sell signal, ready to leave the bullish control zone, but it did get above key support. So blasting above this key support was crucial. So when it comes down here, holding it will be equally crucial. 253. Now, Microsoft looks decent. Obviously, Magma runs shit. So let's look at Apple now. So Apple is next, back above the 200s. Basically the same thing. Basically the same thing. Not giving us a ton of info. You know, looks like it wants to roll over to the downside, but above the 200s. So we'll see if they hold. Google, however, that G in Magma, this thing is definitely spitting hot fire. It looks terrible. So we had the breakout of the channel, got the move up here above the 200s, failed, pushed up again, failed again, gap down, and just got absolutely crushed. Yeah. Rough shape. And I mean, you can blame it on the fundamentals or whatever. You do whatever you want, but I mean, realistically, is this just what the rest of the market's about to do and Google's just like the leader? I mean, we'll find out real soon. We will find out really soon. But this is definitely like, you know, if everything else is just kind of saying like whatever, and then Google's like, hey, shit's about to hit the fan or is currently hitting the fan, it's worth paying attention to. If we see the other charts start looking like this, where it was like, oh, it's starting to look really good now, and then it's like, ha, liquidity suckers, not good. So the other M in Magma, Meta. So we talked about this on the last stream, how basically the trade is a short now. So it would be the entry at that 183 level. For just the gap, though. I mean, we're not using like crazy science over here, okay? It's like just, hey, look, there's a big gap right there. You think we'll fill it? Probably. Statistically speaking, yep. So, and I mean, it just so happens to lead exactly to the 200s, exactly to a key fib level. So that is 16% downside, 4% stop loss. It's like 4 to 1. Technically, it's a bearish trade in a pretty neutral market, arguably bull market, maybe close. Yeah. So Amazon, again, this one failed to get on top of the 200s here. Probably has nothing to do with your boy luckily predicting that they were going to make no money for the entire year of 2023. Big surprise here. So yeah, I mean, that was probably, I mean, we talked about this in advance. I literally talked about how we expected Amazon to run up the entire way to earnings and then top out at the 200s and then roll over because they were going to make no money for the year. So everything I guessed, predicted, the 8 ball told me was going to happen, happened exactly. So, I mean, at this point in time, let's just let it tell us what's going to happen next. And right now it's telling us likely this is going to roll over. And it's not far off those lows. It is not far off those lows. Now, I mean, I say that it's 16%. So it is far off the lows. But it's not crazy to think if it rolls over, we could head back down there. So, all right. So, yeah, that's all I had on the card for tonight. I got to keep it relatively short. I got some ish to do. What's up, Kalma Betty? Good to see you, man. Appreciate you tuning in tonight. Hopefully you enjoyed the stream. Again, keeping it relatively short. Probably the shortest stream ever without technical difficulties. I think there was one time when the stream was less because YouTube dropped it at like 20 minutes. So, but yeah, that's it. So, nice quick one today. Should be a good week in the markets. Obviously, we've got lots of exciting stuff to pay attention to. Very, very close to determining the trend that likely lasts for months, years to come. So, I mean, if you're paying attention right now, when everybody else kind of been lulled to sleep, I think you're probably going to do well in these markets. So, keep grinding. We'll see you definitely on Wednesday for the midweek market update, 8 p.m. Eastern Standard Time. If you just can't get enough, make sure you check out those static videos I've been posting on and off. And if even that is just not enough for you, or you're like, wow, this guy's amazing, I just really want to support his amazing work, or you just want to get access to the indicators, you can join the group. But it costs magic internet money. What's up, Darwood? Good to see you. Yeah, exactly. We'll know real soon which way things are going to shake out. But a lot of people are pretending like they already know, and nobody knows. All right, so everybody have a great night. I'm going to get out of here. Just a reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research, trade responsibly. It is 8:31 p.m. Eastern Standard Time on February 12th, 2023. I am, of course, a crypto trend trader, and Alp says, my only fear is the panic of BUSD. Sue. Yeah, we'll see. I mean, there's definitely some fundamental, like, some fundamentals going on right now. So, but I don't know. If you go off that stuff, most of the time the move has already happened. So, all right, everybody have a great night. Remember, if you use any of the knowledge, trade setups, or anything we talked about in the stream for anything other than entertainment purposes, you will end up living in a van down by the river, which could be an ideal life for some, depending. But yeah, that's it. I'm out. Later, guys.